Here we're going to be going through an example to determine the type of lease based on lease testing criteria. And for example, we're going to determine it's a capital lease here for the lessee, and it's going to be a sales type lease here for the lessor. So what we're going to be doing is we're going to be applying this lease testing here, and we're going to be looking at lease testing criteria here for the transfer of ownership, the bargain purchase option, economic life test here of the lease, and the recovery of an investment on this lease. And then for the lessor, there's additional criteria that has to be tested here, and that would be the collectibility of payments, cost, any uncertain cost here on this lease here, and any profit here on this lease. So for an example here, let's go over and look at our lease arrangement, and I'll just hit on the points that we're going to be involved here in our example. So we have a yearly rental payment here of $11,164 on this lease, and then the lease term is for 3 years. The estimated economic life for this leased asset is 7 years. There's no bargain purchase option here, and no renewal option as well. And then the fair market value of the leased asset here at the lease start date is $40,000, and then the cost of the asset to the lessor is $30,000. So we have a difference here. The fair market value is greater than the cost here of the asset to the lessor, so there's going to be profit in this lease. So this is where we're going to determine if it's a sales type lease. And next, for our residual values, we have a guaranteed residual value here of $14,000, and then the incremental borrowing rate or interest rate for the lessee here is 12%. And then present value of the minimum lease payments. We're going to determine that the present value of those minimum lease payments are $40,000 here, based on using the incremental borrowing rate here of the lessee. So now let's go up and look at our lessees testing that we'd have to do here. So number one here, the lease does not transfer any ownership. That's given in the problem here. So no, it wouldn't pass the test since it doesn't transfer any ownership here. And then to the bargain purchase option, well, there isn't any here. So again, it doesn't pass the test. No, here there's no bargain purchase option. And now for economic life test here on the lease. So the lease term has to be greater than or equal to 75% of the economic life of the leased asset. So our lease term of 3 years here, divide that by the 7-year economic life, and we get 43% here, which is less than the 75%. So the lease term was less than the 75% here of the economic life. So again, it fails this test. So here it didn't pass the test. So the next thing we have to determine here is the present value of these minimum lease payments here. So looking at our rental payment first here, we got a 12% interest rate, 3-year lease here, and the rental payment is $11,164. So discounting that rental payment back here of $11,164 for 3 years here at 12% gives us a present value of those rental payments here to be $30,031. And then next we have to include this guaranteed residual value here of $14,000. Again, we have the 12% interest rate, 3-year lease, discount the $14,000 residual value back here, and its present value here is $9,964. Now we can go and determine our recovery and investment test here. So we get the $30,031 here present value of the rental payments plus the guaranteed residual value, its present value here of $9,964, gives us a total present value of the minimum lease payments here at $40,000. So now we can go and determine our recovery on investment. But before we do that, we first have to determine the 90% here, the fair market value. So the fair market value here is $40,000. Our test rate here was 90%. So 90% times the $40,000 gives us $36,000, which would equal 90% of the fair market value of this leased asset here. Now we can compare that here with the present value of the minimum lease payments. So the present value of the minimum lease payments has to be greater than 90% here of the fair market value of this leased asset. So present value of the minimum lease payments we determined to be $40,000, and the 90% of the fair market value here was $36,000. So the present value of these lease payments here is greater than 90% here of the fair market value, so it passes the test here. So it passes this test. We can also look at it in terms here of take the $40,000 here of the minimum lease payments, divide that here by 90% here. The fair market value of $36,000 gives us 111%, which is greater here than the 90% that was required here for the of the fair market value of those of the leased asset here. So again, it passes that test based on this 111% figure. So the next thing we're going to look at here, we're going to be looking at these testing results, how they're summarized on a decision diagram here to determine the type of lease. Now let's look at our decision diagram here to determine what type of lease it would be here for the lessee. So we would have this transfer of ownership test here, the bargain purchase option test, and then the lease term, is it greater than or equal to 75% of the economic life test, and then also is the present value of the minimum lease payments greater than or equal to 90% of the fair value of the leased asset here. So what we're going to do here is if we can answer yes to any one or more of these tests, then it becomes a capital lease here for the lessee. But if it fails all of these tests here, then it would be classified as an operating lease here for the lessee. So for our transfer of ownership, we determined here that the lease does not transfer ownership, so it fails this test here. That would be a no. And then for the bargain purchase option, well, there wasn't any here, so again it fails the test here. It would be no. And then the economic life test, well, we determined that the lease term was only 43% here, and it was, or so it wasn't greater than the second 75% of the economic life here. So again, it fails that test here. But then we get down here to the recovery of the investment here, wherein we determine that the present value of the minimum lease payments was 111% here, which is greater than 90% here, the fair market value. So it passes this passes the test here where the present value of the minimum lease payments are greater than or equal to 90% of the fair value. So it passes the test, so yes, we would classify it here as a capital lease. And just to review that again here, so the lessee should account for the lease here as a capital lease if it meets any one of those requirements here, and it did meet the requirement 4 here for a recovery of the investment of 90%. Now let's look at applying this lease testing here to the lessor, and we'll be working off the lessor's decision diagram here. Now remember, the lessor has a couple additional tests that we have to do here to determine whether we've got an operating lease here, a sales type lease, or a direct financing lease. So let's just go and we'll start out here for our first test that we have to look at. Does the lease meet any of the lessee's criteria 1 through 4? Now we went through that lease testing here for the lessee 1 through 4. So if it meets any of those criteria here, yes, then we can move on to our next test. Now if it doesn't here, it would be no, and it would be an operating lease. But yes, since the lessee's criteria was satisfied for the 90% recovery of the investment here, that was that 4th test that we did for the lessee. So it does meet at least one of those criteria here. It has to meet one or more of them, and so yes. So the next thing we move on to is this additional test here. Is the collectibility of the lease payments reasonably certain? And if they weren't, then it would become an operating lease. But for this example, we'll say yes, they are. So then we move on to our next test here, and that's that second additional test. Is the lessor's performance substantially complete? If no, it would become an operating lease. But what we mean by the performance here, are there any further uncertainties on the cost to be incurred here by the lessee? So there shouldn't be any further uncertainties required on the cost to be determined for the lessor. So if we can answer yes to that here, then we move on to this last really test here to determine whether it's a sales type lease or a direct financing lease. And this is the key here to our problem that we're looking at here. Does the asset's fair market value equal the lessor's book value? So let's go up here and look at our lease arrangement here. Our fair market value was $40,000, and then the cost of the asset to the lessor here was $30,000. So we have a profit that we have in this lease here. So the cost is less than the fair market value. So this is where we can determine whether it's a sales type lease or a direct financing lease. So let's just go down here and look here. The difference between the direct financing lease and the sales type lease is the presence or absence of a profit or loss here by the lessor. So we had the $40,000 fair market value less the $30,000 cost, equals a $10,000 profit on this lease here. So the profit on there, we got a profit on the lease, therefore it's a sales type lease. So we answered this question here: does the asset's fair market value equals the lessor's book value? No, it doesn't. So it becomes a sales type lease. Now, if the fair market value equal the book value or the cost here, then yes, it would be a direct financing lease, or we would not have had any profit in here. But then we have to also be concerned with here. So is the lessor would account for the lease here as a sales type lease, but it also has to meet the lessor's criteria tests 1 and 2 that we went through here. So in order to meet the sales type lease here, it also has to meet this collectibility of lease payments test where they're reasonably certain, and it also has to pass the leaser's performance here of substantially complete. So those were the 2 additional tests that we looked at, and they have to be answered as yes here before we can either classify that here as a sales type lease or a direct financing lease. And in this case, we determine that to be a sales type lease.